Gold trading is a popular investment, but it comes with its fair share of risks. Whether you're a pro or just starting out, knowing the pitfalls can save you from costly mistakes. Here's a simple breakdown of what to watch out for and how to protect yourself. 1. Market volatility. Gold prices fluctuate due to global events, inflation, and politics. This creates both profit opportunities and risks. Stay updated on market trends. Use stop-loss orders to limit losses, and diversify your investments to balance risks. 2. Leverage risks. Using leverage lets you trade big with little capital, but it can also lead to huge losses. To protect yourself, use leverage cautiously, set clear exit strategies, and keep an eye on margin calls to help reduce the risks. 3. Liquidity issues. Not all gold investments are easy to sell quickly. Physical gold or mining stocks may be harder to trade at a good price. Invest in gold ETFs or futures for better liquidity, and check bid and ask spreads before trading to protect your investment from losses. 4. Fraud and counterparty risks. Trading with unregulated brokers or fake gold certificates can lead to losses. Avoid this by choosing regulated brokers, verifying certificates and digital holdings, and steering clear of suspiciously good deals. 5. Storage and security concerns. Storing physical gold at home can be risky, while vaults come with extra costs. Use insured storage facilities, diversify storage options, and consider gold-backed ETFs for added convenience. 6. Regulatory and tax issues. Gold trading rules vary by country, and tax policies may affect profits. To avoid trouble, research local regulations, keep detailed transaction records, and get professional tax advice to reduce risks. 7. Emotional trading. Fear and greed often lead to bad decisions. Stick to a solid trading plan, use automated trading tools to remove bias, and be patient to avoid impulsive trading actions. 8. Global events impact. Pandemics, wars, and financial crises can shake gold prices unpredictably. Stay informed about world events, hedge your investments, and be ready to adjust your strategy quickly to reduce risks. And 9. High transaction costs. Spreads, commissions, and storage fees can eat into your profits. Compare brokers for the best fees, factor in costs before trading, and take a long-term mindset to help reduce expenses. Gold trading can be profitable, but it comes with risks. By staying informed, managing those risks, and making smart choices, you can navigate the challenges successfully. Plan wisely, avoid emotional decisions, and focus on long-term strategies to make the most of your gold investments.